Good afternoon. It is February 24th, 2026, and today we had a broad bull channel. You can see it's a contracting um, triangle, uh, and what we have is in the overnight we had this move down, and then we get this move up, and we corrected about 60%. Let's see if it could just be. I didn't think about measuring this, so. Yeah, so really it's actually better to look at this. So we had this move down in the overnight, and then we get a bull move, but we retrace the bear move to the 50% mark before just continuing higher. So uh, that's how I was looking at it. Let's move this over so it's not uh, taking up too much space, too much of our view. So again, I think you have to keep in mind the daily chart. So where's the open? The open is down here. So you we could get a trend day, but again, we're just in this range, uh, and prices are more likely to bounce. So when we do go down, there's plenty more room to the downside. So I don't think you want to be too ambitious with these longs in here. I think you do want to stick with the trend and the bias. And problem is, you know, you got a broad bear channel here, and you get an overshoot of that. And so you got to be playing these short-term channels, and it's not exactly clear what's happening. So I don't really. I mean, you could go short here. Technically, that's a second entry short, um, and that kind of confirms the the bear channel. We actually got confirmation right here, but that's a third test. And this kind of looks like a parabolic move up. We got one weak leg here, pull back. Second, pretty strong leg here, pull back. Third, strong leg there. So, I think there's reason to like that. People will take profits. You can see a little pullback right here, taking profits at this double bottom, but it continues lower. And then the market opens, you get this higher low. And if you have this charted, this broad bear channel, and then this overshoot, and you take that higher low, I don't think there's anything wrong with taking this. I just do not. You have to at least hold until the EMA, uh, at least, because this is low probability. Um, so when you have low probability, you want a very good risk reward, meaning you want your reward to be much greater than your risk. And here you're risking 6 points. So you want to go for 12 or 18 points here. And you actually would have gotten well beyond that. It looks like this is like a 45-point move. So really, you probably would. Maybe you take partial profits at the EMA, partial profits at this trend line. It continues higher, and you just, you know, this is a very tight bull channel. So you could just wait until you get a break of that. But the problem is you'd have to keep editing it. You'd have to keep, there's no, like it immediately, this, you could draw it like this, but then it's very easy to argue that, this is a tight tight bull channel. But now that I'm looking at it, this is a little flatter than this one. So you could argue this is the spike and this is the channel, which is crazy to think, but you could think that. So you could argue for this one. That was a long-winded way of saying that. So yeah, we break out a bit above the overnight highs before we sell off. And you can see, yeah, it's the 50% mark. So again, this is a good place to consider getting long. I'm not going to get long in this strong move down. But if you do, look, you have an inside bar right here. You have a weak bear bar. It has a tail, and then you get an inside bar. So yeah, could you consider it? I mean, sure. So here's the thing here. What I would be thinking about is, and this happened a couple weeks ago. You buy this, you want to put your stop below the lows. So let's say you buy at, let's just say you buy it at 68.50. Your risk 68.50. So your risk is going to be about 23 points. So you're going to have to go for about 56 points here. 56. And look at that. It pretty much goes exactly to that. Do you get a measure move? I don't think you get a measure move. Correct. You do not get a measure move. But also what you want to consider is the average bar size. So let's just try and think about this. So here we have a 75-point bar. Let's look at this one. About a 90-point bar, 75. This one's, we'll call this one 75. We'll call that one 83 or 84. And this one's about 100. So let's say the average bar size is 85 points. What you're doing is you're betting on this potentially, well, you're betting on this being a low. So you buy right here. What's this at? 28.50. This high is 50. So we'll say that this is a 55-point day so far. So we have, let's say 30 points to the upside here. So 30 points above 83 would be 69.13. So you put, at first you could put your target at 69.13. That's damn near perfect. Look at that. That's unbelievable. Like just the way when you start to understand how these things work, the market geometry is real. It happens every day. And the computers calculate all this. So anyway, obviously don't hold it if you're this close to the target. You want to be trailing your stop. So that's what happens here. When people start, it goes sideways because people are taking profits. People are taking profits here. But anyway, that's how you calculate this stuff. Anyway, another long-winded way of saying you could enter there. So we get some choppy stuff. You can see we're making higher highs, higher lows. I don't really like getting long or short necessarily. You got 1, 2, 3 pushes up. So had this, I mean, maybe you could go short here, but there's not enough room to the EMA, and this one didn't finish strong. So, then you get a higher low. So nothing in here for me. Let me break out, pull back, boom, go a little higher. And do we create a body gap? Do we create a body gap? We do not. So you can see these bodies and these bodies close, overlap this. So we go sideways a bit. Okay, we have this range. So we get this range. I'm not really looking to short this just yet. But you could look at this as like what Al Brooks calls a higher high major trend reversal. We have a gap below the EMA here. So some people got short right here. All right, we bounce. That's proven level of support. So I think you could consider this. I'm not crazy about it, but you would have to swing that. So you're gonna have to go for a bit of a swing there. I'm really not crazy about that. You got that working in there. I'm gonna take that off. But I mean, look, some people do like that setup. I just don't like it. We get a higher low and a bounce that goes further, and that works. That brings us into this range that went into the end of the day. And I'm not crazy about any of this. There's a lot of overlap. It's not the smallest range, but it's also not that large. About a 10-point range. So, uh, not the greatest day for scalps, but a couple good swings early in the morning. So, hope everyone had a good day. I'll be back tomorrow.